Yeah. Yes, what's up?
What educational topic are we going to break down today?
Today we're going to break down SMT Divergences. This is a tool that a lot of people are trying to use to spot potential reversals, but I feel like there's a lot of misunderstanding about this single tool. So in today's video, we're going to break this down from A till Z with executions included, and after this video, I will promise you guys that you guys will know everything about SMT Divergences and that you can start using it today. Let's start simple. SMT stands for Smart Money Technique. It's not some fancy indicator that you buy from some random guru, but this is actually how real smart money, aka the players in this market who determine what is going to happen to the market, indicate that a potential reversal might be coming. Imagine two correlated assets like, for example, Bitcoin and Ethereum. Usually whenever they are in an uptrend, they are both making higher highs at the same time, since they're correlated. When they're in a downtrend, they're both making lower lows at the same time, since they are correlated. But an SMT is when, for example, we are in an uptrend and Bitcoin forms a higher high, and at the same time, Ethereum starts to form a lower high. That's the first indication that the SMT is happening, which means that a potential reversal might be looming. On the left we can see the Bitcoin chart, and on the right we can see the Ethereum chart. We can see that both are currently in the same timing period, in between the 8th of January 2025 and also the 10th of January 2025 for both Bitcoin and also for Ethereum. What we can see is that Bitcoin is forming a lower low over here. We can also see that Ethereum is forming a lower low over here. Now I'm going to give you guys a few seconds to think about this. Is this an SMT divergence? It obviously isn't, because Bitcoin is forming a lower low and at the same time Ethereum during the exact same time, which is obviously pivotal, is also forming a lower low. Now let's see what happens afterwards. We can see that when we play the replay, Bitcoin gets a push towards the upside. And while getting the push towards the upside, we are seeing a valid break of structure over here. So usually you would say we hop into a long position because we have a valid break of structure and we have a drawn liquidity right over here, exactly offering us a potential RR of 2. But due to the lack of an SMT, which is the smart money technique to give us a high probability reversal, we can see that instead of pushing higher, this reversal structure on Bitcoin is about to fail, and it is simply because there was no valid SMT present on the Bitcoin and Ethereum chart. This time though, we can see that while Ethereum was forming a lower low on the 21st of April, Bitcoin at the same time over here on the 21st of April was forming a higher low, which means a valid SMT. Now, when we play this chart once more, we can see that Ethereum is providing us here with a beautiful break of structure as well, which means that we can potentially start looking for longs upon the pullback, targeting our drawn liquidity right over here with our invalidation beneath the low of that SMT. But this time, since there was a valid SMT present, we can see that Ethereum actually held the low and started pumping towards the upside towards our drawn liquidity, this time offering us major profits on our trading account. Why? Because the smart money technique was providing us with indications that we were looking at a high probability reversal play. Alright, listen very carefully. Spotting an SMT divergence is not a signal to start trading. It's a sign to start watching. You wait for the confirmation. Without a shift in momentum, an SMT divergence is just noise. No break of structure after the SMT means no fucking entry, guys. Here's the real fucking problem, yeah? Most of you guys spot the divergence as we can see over here on the 22nd of April, in which Bitcoin was forming a lower high and Ethereum was forming this massive higher high at the exact same time. You guys look at this SMT divergence, smart money technique is indicating reversal. Let me try to short Bitcoin over here with my invalidation above that SMT high, targeting lower levels. This is not what you want to do. You always want to wait for confirmation, because what we can see over here is that this SMT, even though it was a massive SMT, didn't play out a single bit. It got broken and it pumped towards major new highs on both charts.
But Jip, what pair do I trade after I spot the divergence?
So this is actually one of the most common mistakes that a lot of people make, and I really understand it, because what pair do we actually choose after we spot the divergence? We always try to choose the pair that has a cleaner structure, that has a cleaner drawn liquidity, and that we feel like is going to outperform. I know, guys, I'm fucking annoying, right? Talking about hindsight charts and also talking about theory, when in practice it's actually always so much more difficult. But listen. You guys already know that I really don't like to do these hindsight trade recaps. But you guys also know that I run my own online trading community where I share every trade signal just like this one right over here live with you guys before the trade even gets hit. And right now we are running a 14-day trial period where you guys can join the community completely for free for 14 days. No credit card information needed, no nothing, no strings attached. You guys can check us out. You can find the link in the description down below, and I'll catch you guys in the tribe. Ciao, ciao!
I wanna tell you how I'm feeling, but you know it. First time